Hey guys, how's it going? So, I haven't posted a technical breakdown in a while, so I thought I might just throw one out there because it has been a while since I've actually filmed a technical breakdown. But more importantly, it's been a massive period where I've just been studying. So the whole time I haven't been posting or sort of doing anything. I have been working very, very hard in the background. Essentially, I've just been doubling down on my technicals and my psychology and just really just refining in them areas. So not only will I just better in terms of my growth, my journey, but it's going to make the quality of my trading a lot better. And obviously, as we previously know, I have been facing some sort of issues with sort of impulsive trades. So I was just training myself in terms of restraint and many other areas of psychology, just looking into stuff, doing a lot of research. And yeah, I was able to just really work on that, and that was really positive for myself. So jumping straight into this, pretty much will be a breeze actually going through this watch list. So you can see I actually have quite a lot on. I think it's quite interesting because there is a lot happening in the market right now, but I think more importantly, you know, as a trader, we're all going to be different and we need to know where we want to get ourselves positioned. So it really comes down to your skill capabilities as well. One thing that I did realize when I did do a deep sort of look back on everything, the positioning was the only thing lacking in a lot of the impulsive trades. So as I was able to fix that, I was able to fix a lot of other things as well, especially with the 4-hour content, which I'm not really going to go into, but the 4-hour content was there, which actually did really help with that area as well. So DXY is actually looking pretty solid, I'll be honest with you. So what we have over here is that we've tapped into this area of liquidity at the low where we gapped to it before we filled it, we pushed away. We're just really hovering in this range now. Because price is range bound, we don't know and we can't really determine if it's just going to continue like this before it goes down, fills that, maybe drops a bit lower and then comes higher. That's a possibility. Other possibility is it could just kind of move from here because it has technically done enough. That was the origin of that move, and then basically that move near missed this move and eventually came down. So is it coming down to fill this? It doesn't necessarily have to come to this low, but if it did, it would still be even better because there'd be less of a reason for it to come lower and would be more confirmed to go to the upside. The only thing is if we go up from here, we have to understand that price has the possibility of coming lower. So it doesn't necessarily mean that, you know, we can still go all the way up here before we come down here and fill that and go back up if we go back up. But more than likely, if we are taking a trade in here and price does go here at some point and we get a trade in there, we have to understand that as a variable. Doesn't mean it's necessary, but as a variable, depending on how price has moved away, then we can actually then evaluate, is that your sustainable price action to go to the upside, or is it likely to respond to something like that? And then, you know, we can look for internal structure. Price then eventually taps into these areas, and then we can look to go short potentially back into these areas, right? And then what we may see is something in there where we near miss that and it gets complicated, and next thing you know, we have this. And then overall, it's taken a lot of time, but it's created that into that low, and that would make sense for it to create enough volume for it to just rocket to the upside to then tap into that area over there. Obviously that's way forecasted into the future, and we don't really need to worry about that too much. What we're really looking at over here on the DXY is right now we are hovering in this range, and our main focus is to see if we can get a trade from either from here to here, or if we break, you know, into those lows. So right now what we're actually seeing is price hasn't actually even created, it's near missed here and it's near missed here, which is confirming this range a little bit more to me. I don't really want to be just jumping into any average trade on this. This looks like it's creating continuation, right? And if it does create something like that, then we may get the fill off this to then eventually come back up here, which is possible as well. I'm just not too convinced right now that I want to be just jumping in any average trade because of these gaps it's leaving. And you know, it's taken out this high and it's come down, left a low, taken out that high, failed to kind of fill this level, and then it's now just coming down, and if it taps into that level, great, it's taken out this low. But like I said, it's completely range bound. I just don't want to overcomplicate these things, and I just want to really wait for it to determine the price. So if we get continuation here, then we can see on related pairs and see if we can get positioned in for the long on EURAUD, New Zealand USD and so forth. Otherwise, if this becomes failed and it just gets complicated and it becomes something like that, then again we can look at the next variation where we could potentially see something like this. Now, I'm not too favorable for something like that, I'll be honest with you, but it's a possibility where we could see something like this. Then if you look at the sequence overall, would that not make sense, right? And then when I was looking at this, then I measured it out from here to here, and I was like, well, technically if you look at it from there to there, it does actually break the low. And then if we are going even further, you know, it somewhat kind of meets with this section down here. So then I zoom out a little bit more, and then we see that this could be something really complicated here. So I don't want to get caught up in that. You can see where the positioning would be really good on this, and the positioning would be really good when we actually have a complete structure. Right now it's just still a little bit messy. There's a lot of subjectivity around it. So I'm going to just really leave that one to development purposes. I just want to wait and see how that develops, what really shows up on it. The only negative off that continuation is sitting on that low, right? So one thing I have noticed a lot of the time from studying, from watching, is essentially when you have a continuation on top of a low like that, I mean, it's not the major value area, but it's likely that even if you got this, you know, it doesn't necessarily have to go in like that. It could just still create something like this and then continue to go to the upside. So like I said, we're literally coming off a base right now, and it's a very difficult area to just anticipate a buy and sell because we're above the low. So we need to see very deliberate price action on the DXY, which is going to determine if we're going to be going long or short. S&P 500, now this one's a very interesting one. I think from an observational point, obviously we can see that using the Fibonacci tool, we can see that price came from the top to the bottom of this range. It pushed up, it near missed the high, came back down, tapped into the 50% bang on. It usually is the case with this pair. I'll be honest with you, like you measure this 50% on the right point to point, and you'll see it a lot of the time. You know, I'll just take from here to here, for example, and again you can see, you know, we came back down, we tapped into 50%. This time it did actually break a little bit lower. Nothing's ever going to be exact, but you know, if you then started playing around with the tool, you'd start to understand where and when it's more applicable. So just something I wanted to really point out, you know, something I've noticed for some time with this particular instrument. You know, again, if you get that on exact, you can see again, like push up, push up, taps in, hits the 50% and moves. You can see the same thing again. So it's just one of those things that we're seeing as a repetitive behavior within the nature of the S&P 500. Obviously it's not something that I would just say, you know, go ahead and just take trades based on the 50%, but if you understand how to utilize the tool and you've tested it on this nature, you'd probably be able to make some money on it. So it's just something I wanted to really point out, and it does work on the micro levels as well, just to point that out as well. So, you know, if you take this point here, put it over there, you can see, obviously it's not bang on, but you can see near enough, came up to the 50%, pushed away, retested it, and just eventually went. And then you can just replicate that across the board, and you know, essentially, probably arguably you could build a strategy upon it on the S&P 500. But again, I'm not in here to be talking about that. It's more so about what we're doing right now, and we're literally coming to fill in this gap now, which is nice. What I do really like about S&P 500 is we're literally coming into all-time highs, and what we know about this is we're probably going to break this all-time high and continue to move higher. So I'm not going to be looking for shorts, actually. In fact, I'm going to be looking very, very clearly for continuation below this low to trade into the high to then go long. And if we got something like that, then I know that I'm well protected, in the sense that this is a possibility where price breaks up and comes back in. Yeah, sure, that can definitely happen. Then we get continuation and we go short. But more than likely, a lot of the time, what we do tend to see is that price will break the high and then just kind of rock it a bit and then stall, maybe do a quick drip and then just go. And next thing you know, you're positioned down here and you're well below that low. And I think that's a great positioning. However, don't anticipate this to just go straight away. What we could probably see is price even does something like that and stalls a little bit and goes. There's just a lot of different variables of what could potentially happen. So I'm not going to just be looking to jump into a trade on the S&P if it shapes up. You know, these small little tight flags, they do tend to play out as well. It's just the risk they come with. And I think if you're considerably up on your account, you can afford to take a couple trades here and there on the S&P 500, risking on these small little tight consolidations in its impulsive run. But a lot of the time, it's not worth it. So just going off the bat of that, I did want to kind of just point out that there is a lot of opportunity within this pair alone. It's just time and patience that is required, and a lot of the time you'll probably realize that with a lot of trades. So all-time highs, break the highs, continuation, we go higher. Break the highs. If we do respond from this area, which is a possibility, and we just kind of drop off like that, then I would look for continuation down here, probably a bit more weighted, and then I'll take that as the continuation to go short. And that's exactly how I'll play it. More than likely, I'm not too bothered about it. I don't think forcing something like this and then trying to take a trade up here is your best bet. I think that would be very risky. And honestly, like, I haven't really seen a lot of structures like this on the S&P 500 respond. I've seen them more actually go the other way. So you've had something like this, and then what actually tends to happen is it just continues to the upside. Then as it comes here, it just kind of just pushes further, catches people out, and then boom, you know, you have that. So I just want to bear that in mind. Even if you had something like this, I would be more weary about taking a trade like that. But because it's above the high, I would not really worry about this so much, and I'll just look at the continuation above the high to go long, and I wouldn't let that little piece of information put me off. But again, it really comes down to preference. That would make it higher risk. Anything above here, which, you know, in theory, if you did have it drawn on like that, it's basically outside of this, and I think you're okay with that to take the continuation higher. So that's basically how I'm going to be looking at it for the week ahead. And yeah, that's S&P 500. JP225, probably one of my favorited pairs, because it's one that I've just been able to anticipate and watch from a perspective of just really understanding structure. So what I'm really seeing here is not the best of sequences, I'll be honest with you, but we are responding from all-time highs. We had this huge drop off and a crazy recovery. The recovery did take a lot of time, and it was very slow and choppy. Then what we can see here is that we've got huge momentum kicking again, and then are we just getting ready for the next run? So as I go into the lower time frame, as we saw, we had heavy body price action on the daily leading up to this. We can see on the 4 hour as well, it's just really dramatic, and now we're just stalling. I think this stalling is quite a good sign because we're accumulating volume. Now if we accumulate it in the sense of the structure to get the continuation, even from an A to B perspective, let's say that I can get it in from here to here as a range, and then I'm using the mechanical management in this sense, I could probably still take the trade into that area there if I can get a trade in there. Let's just say that I do get a potential AFT sort of trade, or more advanced sort of 4 hour in there. I could probably get in for around about 5% in and out, and I'd be more than happy with that, even knowing that this could potentially just drop off and go to, you know, crazy numbers. From a mechanical point of view, I'd be happy with that position. Would I probably go mechanical on this? So in the scenario that I was in drawdown, yes. In the scenario that I'm at break even, yes. In the scenario that it's gonna pass my scaling, yes. But in the scenario that I'm just taking the trade and I'm still, it's a smaller risk and I'm nowhere near passing, but I am above break even, then I would be a little bit more loose with that, and I'll keep my management and trail across and just work in anticipation with the bigger picture to see if this can just break lower, and then just take the trades accordingly. And where I would have got out for 5, I may get out for 7 or 8 or 9 or whatever, but that's the way I would see it. So just wanted to kind of point that out, because it's very situational with taking out profits, and even though there's a mechanical side to it, I don't want to overcomplicate it, because the problem that I faced many times before was maybe I would look for a trade and I would get into a great trade, and then due to some emotional trigger, I would make a decision based upon that, or I would start becoming more aggressive with management. So let's say I took a trade up here and I had this trade open, and suddenly it's running, and it's running around about 18%, right? That's a bit insane. Instantly, I might just, or let's say that it's running around about 6%, right? And I'm like, whoa, that's crazy. Suddenly, I might have found myself zooming in and looking at that, and then I would have been like, oh, okay. So I'm running 7.5, it's pulled back to around about 6. You know, the overall run I have about 9. You know what, I'm gonna, and it will go two ways. I'll either say I'll hold it or I won't hold it, and I'm thinking about all this stuff, and then next thing you know, price either is down here or it's come all the way back up there. But the problem is I was valuing this compared to that, right? Now that is an area where it makes sense to see that pullback, right? So naturally we know that we either get aggressive in these areas with 16 to 1, of course, we get aggressive in those areas and then we get repositioned, or what we do is we take the management and then we just keep it conservative, right? And we understand that, okay, it's going to pull back. The pullback could be deep. So what could I do? Well, I could measure this overall run, right, from top to bottom, take that, put 50%. And as long as my stop loss is above 50%, I'm happy, because a lot of the time when we get these larger pullbacks, we tend to see them pull back to 50% before they go. So that's something that I would just bear in mind as well. But I wasn't looking for loose management on this. Obviously, I'm running 16, 18 to 1, whatever it was. I'm going to lock out, and I'm just going to take that, because that's the fine line difference between multiple scale ups or, you know, making a considerably large amount of profit. So in reality, I would get repositioned, and the repositioning was clear as day, to be honest, as well. You could have really actually got involved in there. Top 6, I've got Euro USD, New Zealand US dollar, GBP US dollar, EURAUD. Euro USD, I'm looking at this as a sort of more of the nature of how price is moving. So what we're doing is we're pushing, we're leaving a footprint, we're breaking the low and continuing to the downside. We come back up, we fill where the hook point was left, and then we come down, leave another one, push down, break the low, come back up, fill that, come down. Maybe we'll get an entry in here now below that low. We leave a hook point, we push down, we break the low, and then we come back up, fill the hook point, and then maybe we fill the complete move, and then that's corrective, and then we look for the reversal to go long. It's as simple as that. If I go to the weekly time frame, you can see that we are at a intra weekly value area over here. So it doesn't necessarily mean that we're just going to sell all the way to the downside. It's possible, but it's not likely to be probable. What's likely to happen is probably going to see a bit of a sell-off, reversal, come in, start moving back to these areas as a possibility. I just don't think that this is going to be the catalytic point of price just selling off. It's in a phase 1, 2, 3. It kind of makes sense for it to push higher, so that's what I'm kind of conscious about. So that's what I'm really looking at, is this little channel into this low, or into this low, but more so if I can manage it, that's perfect. I really do enjoy looking at these type of structures because the psychology behind it is very clear. Euro New Zealand. Euro New Zealand is actually very interesting as well. The same thing going on as we saw with Euro USD, just on a more clean level in my opinion. Not very clean, but it's clean enough to understand. Low was broken, come back, tapped into the hook point, left the hook point down, the break, pushed down, correctively tapped into the low, pushed away, filled the hook point, and then this is going to be the catalyst point. If we break them lows, even if we do break those lows and we continue, this will be very interesting to see if we just continue to the downside, which then makes me think Euro USD could continue. So I'm just really looking at that closely, but we're definitely, from a weekly point of view, we are at a good area of value. It's just that's not your typical weekly candle after you get that heavy bodied sort of push. We do want to see a follow through, and we're not really seeing that, so it kind of then makes me question, are we really in full momentum? What do we need to see from the week ahead? What do we need to see from the daily? And then when I look at the daily, it's like, well, that's corrective. The weekly is not looking like it's very bearish just yet. I need to see a solid follow through in order for me to really start getting short on this. So something to just kind of bear in mind, that something we have to really bear in mind here is that we may actually look really good right now on the daily, but the weekly's obviously the overriding time frame, and it's showing a little bit of subjectivity there. So I don't want to just get caught into any average trade because the daily and the 4 hour are looking good. The weekly could just definitely just be the optimal sign that, you know, this bullish pressure is very intentional. This is just a pullback, and when we look at it, it's really just hovering in this area. So if I can take the trade in here and manage it into that 50%, I'm happy. And then if we start breaking below it, great. If not, I will definitely look to get out and just leave it alone and let it just do its thing. As we saw with the DXY, it's one of them ones where it's just a lot can happen, and even though this looks great and this looks great, we just need to be very conscious that the DXY could just, you know, start getting choppy and start messy, and then we start seeing similar price action on these pairs. GU's actually, in the sense of a structure continuation, this looks pretty good. So what we had is an expanding, we had a little hook point above, it pushed up, tapped into it, and now it's rejecting. I'm not hugely favorable of how it's rejecting, I'll be honest with you, because it's very choppy and very slow. So I'm going to be really waiting for, this is my line in the sand area, and I just want to see the continuation below it. I want to see a solid push through, continuation, and go. And, you know, looking at this, we're looking for continuation, we're looking at continuation here. It makes sense across the board for all three. We're just looking for smaller, tight continuation to go lower. Structured, unstructured, reduced risk entry just depends on how price moves. Obviously, in these areas, because of where it is positioned and what sort of size structure we might be playing with, you know, you could easily get in with a reduced risk entry, protection above, you're in for 15 pips, you know, and then if you're trading that into the low, I mean, easily, you know, you could manage that for about % over here. There's nothing really there that it's targeting. Over here, you're running around about 5%. I think that 5%, you could just manually close that, really and truly, if you wanted to. If you wanted to really play the bigger move, then, you know, just be conscious of this little wick fill here. But more than likely, we're probably just going to follow through and go. I just wouldn't get sold on hope. I wouldn't get sold on the fact that it has to go. I would just be more conscious that this could be a type of position that you just trade mechanically, in a sense that you're looking at it from A to B, and maybe around about here at 5%, you just lock out and you just get out there because you understand that the overall sequence here is choppy. So the odds are it comes down here, and or this does a little hook point there, comes down here, and then it pulls back up, fills that and goes. And then what you've kind of done is you've just sat through all of that, where you ran with 5 or 6 or 7, but then you let it pull back, and then you walked away with 1 or 2. So that's the reason why I say be a little bit more aggressive in these scenarios, because of the overall sequence leading into this structure. But, you know, again, if it's part of your plan to just hold on to this and just really want to see it play through, I wouldn't blame you. It's one of those trades that it has potential, but it's just not one that I would personally want to just sit there with hope. I think that would be quite negligible for me. EURAUD, on the other hand, now this is, do you know what? If I did sequence these, I would probably put AN here, EURAUD there. So AN, honestly, what a pair, man, honestly. But you've got this whole overall range, we've tapped into the top of the range, we've been consolidating sidewards. Within here, we left a reference point, we left a near miss, we created a 1, 2, 3, we tapped into it, we then rejected. And then from that rejection, we can then see on the daily, we've pushed away, we created this, we're now on the hover of this, right? So we're basically hovering on the outside of this. We complete with the 1, 2, 3, as you can see, and then a phase 1, 2, 3, and then we're in this section here. If I go to the 4 hour, just to get a little bit more of a refined look, there's two scenarios. There's either we come in for the 2 touch, we come in here, we push up, we get this internal little structure here, where you get something like that. And then you look at it and you're like, all right, sweet, I could take that. I think that's more of an insurance entry play for me personally. Or the second scenario is we near miss that section, and then easily we come down. We don't really come all the way down here, and then we come back up with 1, 2, 3 or whatever. We tap in, we take out the liquidity and we sell, and then we can take it like that. And then what you have again is something like that, and I think that's solid. So those are the two scenarios that I'm really looking at on Aussie New Zealand. In terms of entries, very clear as day. You know, I'm really looking at okay, this would be more of a 4 hour play for me over here. This would be more of a 1 hour play with a 15-minute refinement, or 5 if possible, but more so over here I'd be looking at a 1 hour, 4 hour play. for sure on the bigger 3-touch that would present with that structure there. I think that's weighted, that's solid. This, honestly, this could be a really interesting pair for next week, and especially if you're trading it into that as the first point, because that's where it can really just turn around. If you get that risk entry in there, call it around about even 13 pips, yeah, you're looking at a 12 to 1. I probably wouldn't even take the 12 to 1, I'll probably take the 10 to 1 and be out around about here on the completion of that expansion, and I'll let that be. I'm not really too bothered about the additional 3%. I'll take that 10 and walk away. The overall move though, we're looking at roughly around about 23 to 30%, and I think that would be the move that you'd be looking for. And it's very interesting because you can still take this on like a 0.3%, 0.5% trade, and you can walk away with 15 full percent on your account. 30% in this order, but you know, it's there, so you can see you don't have to trade with a heavier amount of 1% risk. You can trade with less and still get a great profit out there. Going on to additional pairs, I've got EURAUD, I've got GBPCAD, New Zealand yen, and Aussie yen. I think it's, again, even though it seems like I've got a lot on, obviously what I actually have here is 4 on 4 with an additional 5, so technically 6 on 6 with additional 1, so it's not really a lot, but it can look like a lot. So EURAUD, I think EURAUD is definitely could go very underrated and missed. Now if you look at it from a weekly perspective, what we can see here is that we do have this overall liquidity point over here which was tapped into this whole run, correctively squeezed, tapped into it, and then we had heavy body push. When we look at it on the daily, even though we had that great confirmation, we can see that we failed to really just get the follow through, and we correctively came back up. Now I'm surprised that this didn't actually come in and fill the wick. It just kind of just came up here and dropped. Still completely fine. I'm just wondering, is this an overall range? And that's what makes this trade high risk. The only reason being is because if I essentially just box that off and I look at this as a whole section, I can then see that, you know, I've got the low point here, I've got the high point there, we've gapped to the high, we've tapped in, we've got 2 bottoms. Are we now in continuation to go to the upside, right? The other point is we do have this little liquidity point here, so if I go into the 4 hour, because of how the daily looked, we got a bearish high test here, which is interesting. And the way I see it is we had the gap to this point here, and then we wick through it, as you can see on the daily. But then if I go into the 4 hour, we kind of did it with a bit of solid price action here. So this might be an area where I'm going to be seeing how the 4 hour responds, just to kind of get an overall kind of perspective on utilizing that. If you wanted to put it from here, sure, it's a little bit more refined, whatever, it doesn't really matter. What's more important here is that we've come in like this, where we kind of technically have a phase 1, phase 2, phase 3. I'm not too favorable for this 3-phase move, because when I do size it up like that and I look at it, it still has more room to go even from there. And then if I look at it from the break, you know, it's really just directing me back into those areas. So I want to see something a little bit more deliberate in terms of a continuation to the downside. So if I go to the hourly, you can see from the 4 hour we did have that strong bodied follow through. On the hourly I can see strong candles, you know, the candles are getting a bit more momentum in them. We've broken that low there, which is nice, and I was looking on the 15 at the time to see if we got continuation just below there, especially on the 5 or something. We didn't get anything quite there, but I was looking to take something in there to that low and then see how it responds further. We didn't get it, so now I'm looking at something a little bit more weighted. So I'm going to be looking at something more on the 1 hour, but with the 15-minute refinement, and possibly the 5-minute if presented, but more so the 15-minute would be perfect, or 1. So break below that low and just continuation. Obviously a bit aware that if we're sitting on this little bit of price here, call it retesting the back end of that, I don't really think I would want to be too in positioned too well in that. But if we got something about there and I could manage it into there to that sort of retest zone there, that's perfect. You know, I'm happy with that. So more so, it's really about the positioning of where this will be sitting. Even better though, if we just start forming it in this area here right now, I'm really happy with that. Really happy if we pull back, we get that. Even if this starts turning into a bit of an expanding or whatever, this is great. This is great positioning for me to then get short. So I am looking at that a little bit more carefully. I know that could take a little bit more time to develop, but we still might get that over Monday. Now, in no way have I organized this in soonest to latest. I've just basically put it in, organized it in groups, but we could get that quite early on in the week, and I think for that reason alone, I'm not gonna not put this on watch on Monday. Like, most probably I will most probably have, let me just quickly put that down there. I'll probably have EURAUD on watch. I'll probably have EURUSD on watch. I will probably have GBPUSD on watch as well. And Aussie New Zealand might come a little bit later on a Tuesday, to be fair. I'm not looking for that risk entry up there. I'm looking for the reduced risk entry or the later one in the week, which could be a Thursday. So that's why originally I had it down here, but it doesn't matter. GBPCAD, that one could easily come on watch as well. New Zealand yen and Aussie yen could be later the week and so forth. But so EURAUD, solid trade there. You can kind of see the context of it now. If you're wondering about sort of these things, I think, sorry, if you're looking at something like this, where you're wondering, oh, what about if it goes all the way up here? Well, I think at that point there, it's way too large and it's already reaching for that, so you wouldn't even look for that. We're just basically seeing this as a simple sort of section here, where we can basically take that from an A to B section down here. It's one of those ones where it is high risk, so situational. If you're in profit break even, take it. If not, just be very aware what you're trading into, because this can still develop. Like I said, this can turn into, you know, into that. Next thing you know, you're on your way to the upside. So you have to be very, very conscious about the variations of what something could develop into, what type of environment you're trading into, what type of structure you're supported by. And this isn't the best structure in the world, I'll be honest with you, but the psychology of the structure is there. And right now, seeing this for what it is, for me, this would be the higher risk one. If you wanted to take this in a lower risk sense of view, you could wait for the next continuation down here, and then you take that. Right, that would be the lower risk trade. Why? Because you've been confirming that you've tapped into this area, you've pushed, you've had the continuation, you pushed, and now you get the second one, and then you've got clear A to B run into that low, and you can manage that. And that's the way that I see it, taking it a lower risk, is sometimes waiting for the next continuation, understanding the first one, but understanding the variables around it, and then being like, okay, well, I'm going to consciously restrain myself from taking that, because it's higher risk and I could easily take a loss, and that could sabotage my psychology. But more importantly, if I take the next one, it's lower in the risk because it's more confirmed by the overall higher time frame picture, backed by the continuation, which was then presented on the 1 hour or whatever. And now I'm getting the next continuation, which is a little bit more weighted. It's backed by so many different confluences. There's a clear A to B move. The next inflection point is far, far away. And then you can just see how the confluence are more stacked in your favor at that point, because you've then negated the fact that this could have been a possibility, because we've moved all the way down here. So then you don't have that as a theory anymore, and the odds are you're not going to be forecasting the same thing over here. And if you are, then there's obviously something wrong with your technicals, but you're not going to be forecasting that really, right? So just wanted to kind of point out GBPCAD is stunning. Honestly, guys, I think this is one that I think it would be a bit reckless not to want to have it on watch right now, because if we go from the weekly perspective, what I really do like about this is the fact that we have this as a sort of acting value area right now. Because what happened was we created this continuation in here, we then took out the liquidity there, we dropped off, and we took out that, we dropped off, continuation, dropped off, and then we just fell off the moon. The only thing about this is more in a continuation reach at the moment, so this is just now squeezing to the upside, right? And the only thing about this is you could easily get caught in and out of trades. So what we do want to see is more of a weighted confirmation. When you get these weekly sort of confirmations in these areas, it's so much better. You can see the difference that trading something like this in comparison to something like this, you know, it's not comparable. So I just want to kind of bear that in mind. The monthly is a little bit too zoomed out, but it does paint a clear picture of what we're really looking at. And we have two key points right now. okay, the first key point is the one we're literally just sitting above, below, and then the next one is there. And then if we do start breaking above that, then we can start looking at the next price points. From a weekly, monthly perspective, we can see we've actually created all-time lows before we pushed up higher, and that was a very strong week monthly candle. And then we had a really good follow through. So in the sense of where bigger players are positioned, they are positioned in a long position on GBPCAD in these lows here. So I don't necessarily see this as the best sort of area to be shorting, because I'm really going against all of that momentum. However, if I go to the weekly and I look at it a little bit closer, we can see that we pushed up the phase 1. The phase 2 wasn't really clear as day, and then you can see that, you know, these are the sort of real targeted areas. Or then if I look at it from the break, it's a little bit better because we're looking at that as the proper targeted area. Thing is, because it's on the weekly, a lot can happen before we get there. I'm looking for an intraday position. Now, I'm not looking for this position where I hold on for weeks on weeks on weeks. I'm looking for a position where I can just literally get in maybe within the day, a couple hours, or even hold it for 2 days, right? But I'm not looking for like a 5, 6, 7 week position. Understanding that, I can then go to the daily and be like, okay, cool, what is price actually doing? Well, price, as we've established, is technically on its way to the upside. Cool. Can we take advantage of that? Well, yeah, we could have, absolutely. You know, you had this whole consolidation here, which was then shaping up, and now we're just pushing. So we had that, and if I go to the 4 hour, what are we seeing? Well, we're seeing, and I'll just invert this for a second, we're seeing this as the consolidation, right? And then as we're now breaking, we're creating this small little tight consolidation, and we're playing the weight of this overall pattern to then go short. And that's the way I'm looking at it. So I'm looking to play this structure over here to then go short. I'll then go to the 1 hour, and this is where it gets a bit tricky because it does become a little bit more zoomed. I'm just going to invert this back. So the way I see this now is that we do technically have, and if I draw it on to be exact, we do technically have something like this, where, you know, it's more of a bit of a squeeze there. The line chart's probably, yeah, the line chart's a little bit more clean. We basically have this. I just want to see the clear as day structure in there. So I'm going to go to the 15, and then I'm going to go back to the candles, and I'm going to be a little bit more sharp with this. Now, I understand that this is phenomenal. We have that, and then if we call that the base, this is kind of our base section. Now, we know at the end of the day, we usually tend to get some dramatic sell-offs, right? So I wouldn't really price that in as, you know, this is getting more complicated and stuff. I would say going to the 5 now, just kind of looking at this a little bit more careful. There is this little price point down here, but I'm just not too convinced with that area here. I'm going to keep it so simple. I'm going to mark on this point here, which essentially is a part of this point here, right? And I'm just going to wait for price to push back in, give me clear continuation like that, and then I'm going to play that. And understanding everything that we just looked at from the bigger side picture, right? We had the overall larger structure, we're now pushing up here, we're very close to the higher time frame. This then gives us that sort of expanding again, right? If you want to look at it like that, or if you want to draw it on like this, whatever you want to do, it doesn't really matter, because we're looking for the insurance entry. So we're not trying to be perfect here. We're basically looking at, that is the low, we've broken the low, we're pushing back in, we're getting continuation, and we're going. Could this shape up around about market open? Yeah, absolutely it could. It could easily go missed as well. I think it could be choppy as well, but eventually I will be looking for that. And if we do get it and I can manage it, that's perfect. In terms of a stop placement, this is the only thing that I was kind of a bit iffy about, but you know what, it gives me good protection. I could probably get in with around about 10 pips on this and still manage it into the high here for 2.8. Even if it goes around about here, I can't manage it into that little point there, but I'm not too worried because we're on the 5. I go to the 1 and I look at it and I'm like, well, there's the odds that I'm just very zoomed in now, and I'm trying to just take a very zoomed in trade. But then at the same time, you know, that's the risk I'm willing to take on this particular trade. Now, this is high risk as well. What would lower this risk is if we did go like this, we came up here, we came back down, we did create floor like that, and we went. I think that would be That would be the better trade, to be honest. And then you'd basically take it like that. And I think this would be the trade that I'd be more preferred for. I'll be dead honest with you. If we had something like this shape up, I would pretty much all day, hands down, want to take this trade. Right? You've got 2 tops, 2 bottoms. We're playing off that, and then we're playing this to go into here, and then potentially higher. Because what do we understand? Well, we understand we have this as the larger continuation. If we're looking at it as phases, we're looking at it from here to here. We take it from the base. That then leads us into that point. And then if I take it from the break, coincidentally, just go back to the daily, zoom out. It's leading us into these regions here, and then we'll probably see more continuation within that. So just what I basically point out, that's basically the whole thought process behind this. Obviously it's more of a riskier one, but again, we are so close to just filling that. It's very unlikely that we're just going to sell off from here. It's possible, but it's unlikely. What we're really probably looking at here now is deliberate price action to go higher. The only thing is, because we're so close, the stalling isn't really in my favor. That's why I said the little flag in there. But honestly, if you're going to wait for a trade, wait for this trade. This would be the better one. But then you have to understand this will probably shape up by probably late Monday into Tuesday. Well, it will start shaping up by late Monday. By Tuesday, you get the trade, and then it would be more of a Tuesday trade. New Zealand yen. So these yen pairs, easily could have filtered some other yen pairs on there, but I just had to go off and pick 2 of my most favorited ones to trade. Now, I went for Aussie yen and New Zealand yen. I'm basically looking at this as continuation. So what do we have here? We tapped into this area of liquidity there. We are in a run of momentum. When you do look at it from a perspective of these yen pairs, you can see that we did kind of pull back to that 50% region, and if I take it from the base of here, you know, near enough, we're still in continuation territory for downside. I just want to see that as profit taking. So I see that we sold off, we started profit taking because that wasn't any area of major significance. Like if we had that retrace from, you know, call it like a base point here, right, and that was a little bit more significant, or even from that point there, and then we started pulling back, then at that point there I'd be like, okay, you know, I don't really want to be sitting on a pullback like that. But because we're coming from like some minor inflection point there, I'm not too concerned. More importantly, now I'm just looking for continuation. So as I see it on the daily, we know the weekly's in, we know the daily's coming in quite heavy as well. That's really nice. We can go to the 4. We can then see on the 4 as well that even though we've responded from this little small consolidation, that's working as the footprint in the market. We've correctively come in, tapped into it, pushed down. We didn't get the most structured continuations, but they were there. And now we're getting the more the smaller degree level of what we're seeing here. But now if we get that with structure, that's perfect. So there's 2 ways I'm looking to take this. I'm looking to take it from either this high or this high. I think the one above is more preferable. I would want to see, because they're so close, I think if I measure that, we're probably looking at, yeah, like a 40 pip difference. So the only 2 ways I'm looking at this here now is if we do drop off and we come in here and then we start pulling back and doing this, then I understand that we could just sell from there. That's fine. The other scenario is if we're just hovering within this range, it's very likely that we would complete the pattern within this range, but then we'll probably extend, tap into that level, push down insurance entry, and we'll go. We get the more refined entry from in here, or if you want to take the risk entry at the top, whatever, I can get in there with even 10, call it 14 pips to the low. Even if I mechanically take that, I'm taking that 9% out, and then to the low 10, and then I'm looking at the bigger picture if I'm, depending on situationally, and then with the wick fill 33%. So you can see how a simple trade like that can turn into an absolute monster of a trade. So this is probably one of the biggest gems of the week besides Aussie New Zealand. Obviously I'm more excited about Aussie New Zealand for obvious reasons, because of the picture around it, but this one is still equally very, very good. Same situation with Aussie yen. Arguably you could say some of the other yen pairs do look good as well. I'm just not one to put too many yen pairs on watch. Perhaps maybe when they start shaping up, I might possibly look at the other yen pairs and just kind of make a decision in the close to the moment of which one I'm going to go for, because I've already analyzed on those. But Aussie yen is probably the one here as well, where we come in and then maybe we come in with a 1, 2, 3 into that area, we take that out, and then boom, you know, we get that internal structure. I can risk entry that, and I'm happy with that. I'll risk entry that all day and take that into the low. The risk reward is not exactly the same though. I actually believe if I took this with, call it around about 30 pips, yeah, probably looking at a 7% on this, while I was looking at 10 on the other. And if I take that 15 to 1, trade's good, trade's there. It's just I would really have to see something, and that will be more for 1 hour play for me. So the likelihood is I'll probably take the trade like that. Probably take it like that if it's shaped up, and then I'll probably take it into here for 5 to 1. I'll probably be out for a 5 to 1 if I took Aussie yen. So the fine line difference between waiting for an insurance entry versus taking a risk entry, I get in for a better entry majority of the time. I mean, look, the risk entry would probably be valid here as well, given that even if I had something like that and then it came in like this, then I would probably do the same thing I did with that, and I'll probably come in with that, and then all of a sudden mechanically on this I'm looking at a 7, 8 to 1, 6 to 1 maybe. So like I said, variations on variations, it really just depends on how structure forms internally as well, the psychology of the whole structure. These are your bread and butter in my opinion. Like honestly, like when you understand the psychology of where we are from a higher time frame to lower time frame, it's so powerful, honestly, in combination with everything. So that's one of the things I love the most. The other one is Aussie yen. Yeah, so literally same situation. Obviously I could get the insurance entry on this, and if the insurance entry shapes up down here, let's say for example, and I can get in for 10, then you know suddenly that turns into a really good trade as well. So it's not like because I'm taking Aussie yen the risk reward's not going to be great, it's just what's more likely to happen. And yeah, we just have to wait and see. But like I said, it's one of those ones where when price is shaped up and we look at it, we'll have to wait and see. But I promise you, like if these structures shape up and they give us the right confirmation, the risk reward is there, like definitely. And you wouldn't even need to hold. Like I think it'd be pointless to really hold for the 16% when you know you could get out for a solid 5 to 1 and then not have to sit through whatever happens next. But most likely impulsive price action follow because of the momentum and seeing how sequence is, but we'll wait and see. So the extras now, I'll tell you, to be very honest, in line with Aussie New Zealand, this is probably one of the best ones that I have on watch this week. Natural gas, honestly, like it's already shaped up for an entry for me, but more than likely I just go to the weekly. We can see that, you know, from a weekly perspective, it's just like kind of like, whoa, okay, what the hell's been going on? Just massive sell-off. We're now in this area here. It's kind of going a little bit sideways, this and that. Cool. From a weekly perspective, you can see that it kind of looks like it's just kind of pushing higher, which makes sense, and it is possible. But then you go to the daily, and then you see that, okay, we tapped into this area. We had a 1, 2, 3 into this area. We then came in and we rejected. The real question here that I had was how did we reject? Well, we rejected more than 50% of that candle, which validates the risk entry on the daily. Cool. Then I look at it on the 4 hour. If I look at it on the 4 hour, just to get a bit more refined, because we saw on the daily, just to go back there quickly, it's a bit heavy, right, on the body. So we can see that the daily was heavy on the body. The 4 hours here, I'm seeing that as a full follow through here. This is phenomenal price action. I'm looking at this as I'm measuring from the top of this to, call it from that section there to the top. It's through the 50% of that, but I'm not more concerned about that. I want to just see from here to here, right? Oops, sorry. From the daily, from this candle to this candle, right? We've closed there. Okay, so we've established that we've heavy bodied. That's great. I want to see from the top of this to the bottom of that, where's the continuation, right? And to be honest, the continuation is like positioned really well right now. Anything here or below is great. So I've established that the positioning of the continuation is good. I go to the 1 hour. I then go here and I'm seeing some sort of reference points and so forth. I need to see price kind of sit in this area for a little bit longer, which is nice because by the time it comes to around about early London session, this should be ready to go, given that the structure is there and it's been moving. So right now we're creating them 2 floors, come up for the second top, and then we push down and come back for the third, and then we sell. I'm more than happy with that. Is this a situation that I'd reduce risk entry? Possibly. I don't think there's a problem with that. I think given the circumstance, if I get my pending order over here, limit order, whatever you want to call it, I get tapped into there, even to the next inflection point, I can manage that. I can manage it into that point, and then to this point, 4.2. I just don't think personally that this trade, I mean, to be fair, reduced risk entry is not terrible. It's not the worst thing in the world. I know with my capabilities, given the circumstance, I might even just set that on just in case. I could probably get in here if everything shapes up to the way I'm looking at it. I get in with 15 pips. Depending on spreads, you've got to check your broker. And even into this point here, I can get a 10 to 1. Right? I can get a 10 to 1 into that point there and get out, and then get repositioned on the next trade. Or, you know, knowing big potential wise, playing the full 90% of that range, you're looking at 30, 40%. Mechanically, you're looking at, call it around about 30, 33, and then playing the absolute exponential range, playing 60, but we're not playing 60 here. We're playing this, and I'm looking for a 10 to 1 simple trade, A to B. And that's basically what I'm looking to play here. So I know exactly what I'm clear on, I know what I'm going to be taking, and there's no need, I didn't even have to go to the 15 and the 5. 15 and the 5 will come when I'm using my trading plan to then refine this 1 hour flag. So that's just something you have to bear in mind, that it's not, you don't always need to use the 15 and the 5. Like the 1 hour could definitely be there. The 1 hour could come here, and I've got protection there, and I'm happy with that. Where I thought I was going to get 15, I got 16. Cool. My 10 to 10.5 turned into 10.3. Like, you know, it's very, very small on the pip difference there. It's just as long as I get the proper confirmation in, that's great. And I know if I don't get it and I'm late to the trade for whatever reason, I can still get in there with 30 pips and I still get 5 to 1. So, you know, that, and that's to that inflection point. I'm more than happy to get out with 5 to 1, but then I know that I could be still playing a 10 to 1 anyway. So it's interesting. If I go more aggressive, I'll be more likely to take out profit sooner. If I go more loose and larger stop, then I'm more likely to be more lenient and let this one play out to probably only get out with the same amount of percentage I would have with a tighter stop. But I know what I want because I'm taking this to scale. I'm taking this to go to the next point within my milestone targets. So that's the thought process behind that. But you can see the phenomenal thought process there. Obviously, on the other side of things, this could still turn into continuation. It may just fail, as we've seen before. Do something like that, get a bit choppy, and then boom, starts moving higher. That is a possibility. It's just the one thing I think about here is that we've not really responded from anywhere significant. So if you did look at it here, that was kind of the start of the push to the upside. Great, we've tapped into it and then we created this. But more than likely, I think what's possible is if we do continuously see follow through, this is a great place to get positioned for shorts, just because we're back to a structure met with a sort of reference point. We do have the level of the retest, which should not be going neglected as well. If you look at it like that, I think it's better drawn on anyway, and then you've come and you've retested. It's just phenomenal in so many different layers here. So I think if you're going to have a pair on watch next week and you're just thinking about adding an additional one there and you're not too sure, between Aussie, New Zealand and natural gas, hands down. Check the spreads on natural gas though, because some brokers can be fairly crazy. So if you are going to filter, then I would say probably Aussie, New Zealand, but even with Aussie, New Zealand, the swap spreads can be pretty crazy. So it comes down to personal preference at the end of the day. Silver's an interesting one. Even though we have a 1, 2, 3, this comes in perfectly with how you look at positioning. And if you look at that, it's way above the range now. It's coming back to the upside. You know, just looking at gold as well, just going to quickly jump on that. You can see with gold that gold is just all-time high reaching. It's pointless. Like if gold is shooting to the upside, most likely we're going to see silver coming to the upside as well. Looking at that as well, I'm not trying to just correlate and take the trade because of that, but if you look at it like this, right, look where we're positioned. Right, we're positioned for continuation, really and truly. This is your hands down sort of continuation where you could probably argue there's this aspect of a running channel in here, and if you did say that, I wouldn't say you're wrong. I would just personally say that look where we're positioned as well, and more than likely there's two things. I'll go to the 4 hour. We can see that, you know, this leg was very impulsive. We had a little bit of correction here, very impulsive, pushed to upside. We created a bit of a footprint there. I'll get on the 1 hour to get a bit more refined. If you see continuation like that, I think that is very clear that we're moving to the upside, and you would want to get positioned in there. Insurance entry, risk entry more likely for me, but I'd probably go a bit extra. I think with silver you probably see something like that. So, you know, I would wait on this one and just kind of wait a little bit extra. If it starts to push out and starts to drop off over here, don't write the trade off straight away. I think still be very patient with it, because then what's going to happen is going to push straight back in, give you a small little insurance entry in there, and you're going to be good to go. And then next thing you know, even all the way up to here, you're looking at 13 to 1, so you can still be out for a 10 to 1 way before that happens. And then, you know, you're not worrying too much, and this could just be very impulsive. I'd be aware of this point here, but I wouldn't let it put you off the trade. I'd just be aware of it. And then even if you wanted to lock out with your stop loss on that point there, 8.5, whatever, you know, it is what it is. I'm not saying that it's going to reject from there, but I'm just saying be aware, because it could get a deeper pullback in this area to then create enough volume for it to then go. Because if you look at this overall run, it's not going to be your typical sort of straight up impulsive run. Sometimes we do tend to see pullbacks, and then we get larger continuation in these areas, and then we start pulling to go higher. So be aware of that. The next one I'm looking at is coffee. Oh man, coffee. You know what? I almost was a bit all over the place with this, because I was like, there's so many pairs on watch, and honestly, if I showed you the ones I filtered off as well, you'd probably be like, oh man, you should just have them all on watch. But let's be very real. We've got value area. Well, let me go to the weekly. Right, all-time high. We're at all-time highs now. What happens usually when we're at all-time highs? We either push higher or we sell. We need to wait for a bit of the mass psychology to kick in to tap people out, but look, we know that's the all-time high. We tapped into it, right? And I'm just zooming a little bit closer. We tapped into the all-time highs here. Great. And then we gave a really decent candle, to be fair. We failed to commit and we pulled back. Now this is even better. Why? Because now if I look at it a little bit more intricately, you can see 1, 2, and 3. Go to the daily, you can see that a little bit more closer. And you can see here, and I'll remove this, I'll rein that in a bit back. I'll just remove that. You can see here that we have the 1, 2, 3. That's great. It's a squeeze, right? So overall, we're trading a squeeze right now, and we have to be very, very conscious of that. I'm more so in the game to evolve this now and just see it like this. I don't really mind if it taps into it on the third touch or not. Why? Because we are at the level of the override, and I think that is the real main important thing right now. So I'm going to go to the 4 hour quickly just to get a bit more refined on that, just to show you that we have this as the override. I just need to see an insurance entry from here. I'm not looking for a risk entry at all, because of obvious reasons. If you try to take a risk entry here for whatever and it pushes up higher, you're going to be surprised, and then it does that and it goes, you know, you're asking to be tagged in and out, so it's pointless. Go to the 1 hour quickly, and I want to see a follow through. So either we come in here and we just drop off, that's great. I look at it on the 4. It would have practically retraced that whole candle at that point anyway, which is good. Ideally, if I look at the continuation, I want to see it from the full candle. I want to see at least 50%. Because of where it's positioned, I want to see at least 50%. It's below that 50% line, and I can take the continuation even if it was right there. I'll take it, because then I'll go to the 4 hour. Well, this is the 4 hour. You'd see the candle would be in this area here. It would have closed pretty heavy bodied as well, and you'd get that follow through. Likely, we might even see a wick. So we might see something like this, where the wick comes up, comes back in, and then we get like a bearish candle, and then it drops off like that, and then we get entries down here. That's completely fine too. This is more confirmed, because it's essentially just taken everyone out, the mass psychology in that area, pushed back in, and then we get continuation to continue. Similar to what we saw in these areas, and we can get a run like that. Even now, I think it's more confirmed that this is going to be more for heavy candle, a stronger move to the downside with bigger players stepping in. So that's where I'm very, very keen to see how this shapes up. I'm not too bothered about the structure, I'll be honest with you. I would keep it so simple, and I would just say this overall price is a squeeze. This is a squeeze. I'm trading in squeezing territory. I need to know my cautions. I need to see the confirmations. Either that pushes up now, the next daily candle gives the washout, pushes all the way up, takes everyone out, comes back in, closes, and then we get the morning star, evening star at the top here, and then we get our entries to follow. So you can see it's just a great territory to be then positioning yourself and looking at your trading plan and seeing where I'm going to get positioned. First trade, second continuation, third continuation, whatever, they're all good. You know, you get this one down here later, that's perfect as well. You know, you wait into next month, you get something like that. That's still stunning. Like, there's so many great trades that could eventually come from this because of where we're coming from. So it's a great area, great territory for me to be putting coffee on watch. Wheat. Now, the thing with wheat is it's come up with 3 strong bullish candles into this area. I think this is a perfect area to look for rejection. I think this is a perfect area for me to then look to play my 4-hour play here. I'm looking to get a weighted time frame. So from the weekly, we saw that we came in quite aggressively. From the daily, we can see that is it looks very impulsive, but you know what? Because you can see all these small daily candles, when you look at it on the 4-hour, it's actually corrective. You know, that's actually corrective approach. What we know is we're going to wait for an insurance entry here because we don't have the structure to support it. So what we're going to really do is just wait on the daily to see if it's broken, and it has broken through. It's not really a very convincing break, so I wouldn't be surprised if that wick just kind of pushed a bit higher. Next candle, we pushed up, and then on the 4-hour, as soon as we've had that push up, we can filter down to the 4. We can see the strong push back in. If we get, you know, great price action, let's say like candles like this, I think that is a great example actually. Let me just scrub that. If we got something like that, and I'll just squeeze that in there. If we had something like that, that's perfect. You can see it, right? We came up, we pushed, heavy body, bigger players stepping in, continuation, boom, we're in for the short. And that's exactly how I'm looking to take it. So that's wheat. Simple, very, very simple, easy trade to understand. And I'm basically playing the range. I'm probably going to go with a mechanical view on this one. I'll be honest with you. I'm probably going to be going, I always do upside down. Probably going to be looking at it like that, and then if I get positioned in there, I think I actually would be able to get in a bit tight. But even if I got in with, call it around about 5.7, or let's say reduce risk entry for argument's sake, I could still walk away with a decent 4% on that, and I think that is still a very good trade. I would look for the risk, and I'd probably still take it like that. 8 pips, yeah, 7%. Not much of a difference. Probably the reduced risk entry may actually be better in this scenario anyway, but that's basically how I'll be looking to take it. Obviously, we do need to understand we are pushing away from that break. And we do have that weekly momentum there. So this being the way it is with the insurance entry, would be deliberate enough for me to then look for it. But that's basically it does need a bit of time to develop, I'll be honest with you. That probably wouldn't shape up until, you know, Tuesday time for me. So that's basically what I'm really looking at. Aussie US dollar, last but not least, it's similar scenario to what we're seeing across the board, tapping into them all-time high areas. Now this one's pretty much one that I was kind of 50-50 with. Do I want to put it on watch, do I not? Well, the thing is, because we're so close to all-time high areas, that could just happen over Monday. By Tuesday there's a trade. So as we see it on the weekly, we can see we're squeezing right now, and we're about to tap into that all-time high. When we tap into it, that's when the real determining factor comes into play. And I think similar to how we're seeing the SPX, we may actually just see more continuation to the upside, which is completely fine. I'm just looking for the shorts. I want to see it tap into that high. It's taken it out, and I'm going to go to the 4. I want to see it take out the high, and then the exact same thing we were talking about wheat. I want to see it push back in, heavy bodied 4, give me continuation maybe on the 1, and then I'll get in short and I'll get in there. Even if this happened to be a little bit more down there, I'm still happy with that, right? I think the more heavy that is, the better it is anyway. I just need to see very deliberate price action. I'm not looking to get involved on a risk entry. I think that's a bit too aggressive. I think waiting for that insurance entry is your best bet. So that basically summarizes the watch list for the week ahead. I think there's a lot of gems in here, to be honest. This is going to be a really, really interesting week ahead. I think it's definitely one that's going to require a huge amount of focus, because there's going to be a lot of variations of things happening. Data is going to be changing, and some things are just not your typical easy type of trade. There's layers to a lot of these trades, and we're kind of playing more of a psychological play this week. And I think if you had your technicals on point, you'll really, really profit this week. But more importantly, your mindset. Where's your mindset at? And I think that's something to go into this week really thinking about, is keeping front of mind. If you're struggling with impulsiveness, restraint, keep that front of mind. How can I restrain myself? What can I do? What mitigation can I put in place? Am I following my trading plan? Am I over trading? Am I taking one trade in a day, 2 trades? Realistically, if you look at all of this, right, there's no reason whatsoever for me to probably take more than 3 trades this week, right? Because of the amount of opportunity there. If even 3 of these shaped up the way I forecast it, there's a high probability that I'm probably going to walk away with over 10% this week. Just kind of want to point out. So I positioned myself through my forecast on trades that pretty much have 5 to 1 as a minimum, and exponentially, between 10 to 30% on the majority of these pairs. So if I get positioned on the majority of them, I've put myself in a massive winning position. Just wanted to kind of put it out there and just kind of let you guys know that I've also been posting these story videos. Obviously, just did it there because I just enjoy listening to inspirational videos. I also like creative writing and stuff like that. So I kind of wrote up some stories and then just made some videos with them and put them on the channel. You can watch them. You don't have to watch them. It's up to you. Sometimes I put some of the analogies that I speak about and I just make it into a little story and then put it in there. Some of them might inspire you, which is the main point. Some of them you might learn something from, but I will post them from time to time. I might even start making some like guided meditations and some other bits and bobs, maybe some explanations on key points like atomic habits, trading in the zone, thinking in probabilities and so forth. I might actually get some AI written stuff. I think the AI articulates it a little bit better than I do, and I think the message comes across. But all in all, you can always ask the question in the comments or drop me a message on Instagram. I'll be more than happy to elaborate. So yeah, guys, thanks for watching, and I hope you found some value in this episode. If you did, you can always like and share this video to friends, and I'll catch you guys in the next one. Take care.